Good morning, ladies and gentlemen. Today we're going to be covering Lowe's and Dick's Sporting Goods after they just had earnings yesterday. We're going to be giving you the bull and the bear case for each, and actually a shocking surprise to which company did what. It was not what I expected, but that's what you get sometimes in the market. So we're going to start off today with Lowe's, and timestamp down below if you guys want to skip the Dick's Sporting Goods. If you're not interested in Lowe's, just look for the timestamp in the description below. So with Lowe's on earnings today, basically you actually had a interesting earnings. So I'm just covering Lowe's first because I was reading their earnings where they downgraded forward guidance. So you would expect the company to do pretty poorly. Honestly, they did pretty dang good. They had a good quarter. Based on the reported earnings, they had about a beat on the EPS about 6% and a surprise on the revenue of 3.46%. So definitely good that they beat revenue. However, this is a sector that's been basically very tied to housing, and you don't see this rampant run in the price. And Lowe's is pretty interesting because you've basically been in this sideways consolidation between the prices of 221 and roughly 187, just going up, down, up, down, up, down. You had some volatility breaks out of it, but you really haven't had a good solid break of this area. And especially you do have the possibility of a massive A to B pattern floating on the chart where you, from the all-time highs, the October lows, or June lows, I should say, and to the last highest peak, would bring us Lowe's down to below the 200 weekly and brings it to $135.73. Now that is confirmed once you trade below the 165, which you would first probably have to break your 200 weekly. So it's a pretty easy way to tell if this pattern is going to play out. If you break the 200 weekly, then you're most likely going lower. However, you have to break a lot of structure before you even get to the 200 weekly. A lot of the SMAs are correctly positioned. You have the 50, the 200 daily, the 50 weekly, then the 200 weekly. So all these SMAs are in the correct order from where you would expect. Now they are in this region where basically they're tightly wound together. So you are going to enter that stage that I call the kangaroo. But for now, you're above all of them. So your first two supports is going to be $102.18 and then $199.86. So let's just say 200 round right there is where a solid region where you would expect support. And let's say that support falters. $196.72 is your next support where you recently had a closing bounce off. You open at the 50 weekly, then push down, broke below it, push back and close above it, and then had your retest going into earnings. You did held this area into earnings, so now you could be carving your void from the bottom, bounce, came for a retest, and could push higher. Now, how much higher do you guys suspect? Well, right now you're kind of in a kangaroo, and proverbially, if you look at Luxalga, you got a sell signal and a buy signal. So it's telling you two things. Now, we do have the sell exit right here, followed by the sell signal, and you are in this price action zone that has been touched before, so I wouldn't necessarily look for that to hold. You do have a solid support sitting at the $195.76, and again, this is where your moving averages are. So just keep an eye on that, guys. If you come back down to that price, definitely potential there. Your MACD is crossed bullish and starting to get above the 50 line. So really, it depends. If you can get above this price point of $215, then you could have a runner target. But then again, you are in this consolidation period here, and you have a reversal zone sitting around the 225 area. So the reversal zone starts at about 217 and works its way up to about 226. That's where I'd be looking if we get back up there as a profit taking opportunity. But with this run, you're gonna have to have a serious run not to create a MACD divergence where you have price right here. Any break above this level here will result in a MACD divergence that you're gonna want to basically have to get up probably to this 230 level, just not to have a solid push up that doesn't just completely get bear rejection. Now, you do have events that are going on with the debt ceiling similar. Go look at our short that we did on the 2011 crash, or flash crash as I could call it, where the market dropped 18%. Lowe's is not going to be immune to that. It's part of the Dow. It definitely going to be affected by it, but even with the market falling today, especially Dow was down approximately 0.69%. Lowe's was pretty much unfazed, having a nice push up of 1.72%. So the regions that you're basically going to have to tackle is if you come back to those $195 level, you're probably having a bounce there. And then I'd be looking to get above this area of roughly the 211.68 and then continuing and breaking the zone at 215. That's where you would see a strong push off these levels and have definite possible continuation to the upside. So now let's just quickly jump over to the weekly just to see if it's telling us anything what we may have been missing. So again, that 225 area or 217, 220, you do have a price action zone on the weekly and a price targeting zone. So about that 218 is where I'd be looking to get out, and the RSI is looking like it wants to roll over on the weekly, along with MACD separate from one another on the weekly as well. So again, you could see a price run, but I do expect that price run to fade, especially with the guidance. Once people maybe come to their senses about it, it really is going to be an interesting point. So we have to be careful once we get up into that region and how the price is treated. You do have, again, that sideways consolidation right here, that until you break out of it, you really can't pick a direction. But again, you do have a lot of support on the bottom. So lows could be an interesting play to the upside, even for the short-term potential. And then basically, if you're looking to build a position, it would be a little better to build it now and then basically see if it rides out. If you break any of the moving averages, you basically just close out the position and it's not a big loss. You have proper risk management there. And if you get the upswing, then you keep riding the upswing until you think you have a profit-taking opportunity. Now, not what exactly I would do. I would be looking for other companies right now just because I don't trade necessarily sideways stocks. But it is an interesting opportunity for someone if they want to ride a swing trade on it. Maybe not my cup of tea. So now we're going to jump over to Dick's Sporting Goods. So looking at Dick's Sporting Goods on the daily time frame, you can see we're very near the 200 daily moving average. So that's where I would expect to see the bounce. And honestly, with this one, though I said in the beginning of the video, it's very interesting how it played out, because Dick's actually had a similar earnings result where they had a beat on EPS, beat on revenue. However, the stock basically fell downwards, and they reaffirmed the guidance in it compared to Lowe's that kind of showed weaker guidance but had a completely different reaction. Now, this is a company that's in the Russell, and the Russell had a pretty interesting reaction today. So we're definitely going to have to keep an eye on that to see how it plays out. So just remember, keep an eye on that. You were down 1.44%. So that 200 daily is probably going to be an interesting buying opportunity, especially in this area that it's trying to bounce off this previous consolidation here. You actually closed above this transition peak right here that was previous resistance, so it could be a possible area that you're now going to swing back off of and head higher. I don't see anything in the earnings report that basically would scare me off completely. Now, you have to do your due diligence with that, but let's just go over to Lux Alco just to see what it's telling us. We're going to jump over the daily first of all. So as you can see here, there is a lot of price structure on Dick's Sporting Goods. You have a lot of support at the $120 region, and then really a nice big fat support at 108, and then really chunky support at 98. So you have a lot of price structure to possibly build into position if you keep selling off. The stock is oversold on the daily and sitting in a reversal zone and a price target zone. So definitely could see a bouncing from this point. But then again, I'd be cautious in investing anything really long now with all the debt ceiling talks going on. The markets have a tendency to maybe give you some more discounted prices than you would be expecting, along with the MACD is still crossed bearish. So we just have to keep an eye on that until this starts curling back to one another. You could see temporary bounces here, but then again, I'd be looking for that $120 price point to be my bouncing point, which would also coincide with breaking the 200 daily, but then probably reversing back above it, and it'd be the middle of the zone. It's just a nice area that I'd be looking to target. And another interesting fact is you do have a MACD divergence possibly forming here if you got a nice reversal off this area, because MACD would be going up and price would be going down steadily at this point, referencing this point here. So definitely gonna see a possible correction in it. So this company is showing bearish signs on the price action, but it's showing potential for a reversal in this region. So we just have to be cautious about where we buy into the company and how it plays out. Remember, you're near key moving averages. If you break those key moving averages, then you're definitely going to see downwards price action if you break the 200. And when I say break, you have price action move below it, close below it the whole day, and then have another candle close below it. That would be looking at that $116 area, which would bring you into kind of no man's land here, but you'd be thoroughly in the reverse zone, but you could have a slide. So again, anywhere between, I'm going to say the 120 to about the $107 region is a significant discount on this company. And you could be setting up a possible, and I mean extremely massive, A to B pattern on the way up from the lows here to the upper wick here to this very complex. Let's even pull it down to the 109 just to see and give you guys perspective. This could land up at $185.70 if it completes and takes out this high point here at $150. So that would be a nice appreciation to the upside, nearly 85% or 89% profit for anyone that would partake in it. So again, let's jump over to weekly just to see what it's telling us on Dick's Sporting Goods, just to see, one, could you have predicted it? And the answer is pretty much yes, because your MACD on the weekly crossed bearish. You are significantly diverged from one another. However, you are in the cloud, you are in a price targeting zone, and that's where I'd be looking to possibly pick it up. Remember that risk reward at the $116, which is your 50 weekly moving average, is definitely going to be an area that I'd be looking to possibly target. That 50 weekly moving average hasn't been retested in a very long time, so it's going to be strong support. I don't suspect that you just send right through it. If you do, then that's when you need to reevaluate your strategy, because this is telling you something that basically, hey, something's going terribly wrong. I need to basically reevaluate what I am seeing on the chart here. So again, be careful whenever trying to bottom fish it, guys. But again, this is where I'd be looking to make a position start, just because it is in a nice price area. Now, what concerns me a little bit is the big room I have to this nearest price action zone on the weekly, going down to the $99 region, which would pretty much invalidate that A to B pattern on the way up. Also, that would be a significant break of a lot of the SMAs. And you're holding on to the RSI above 50 on the weekly. So if you manage to close above the 50 on the RSI on the weekly, I do definitely think this could be a possible turning point to go higher. But if you fail to do that and head lower, then I'd be looking for, once that RSI crossed the 50 and close on the weekly basis, and the MACD would most likely at that point start curling below the zero line, you could have significant price depreciation, similarly to where you had here back in the beginning of 2021 all the way to 2022. So just be careful around that. History has a tendency to repeat itself. So now for the upside potential on Dick's Sporting Goods, assuming this is an area where you basically would want to buy. One, I'd be targeting this gap fill off this gap right here. That would start at roughly $129 and fill at $133. It's not a huge gap, but then you got a secondary gap above here. And you guys know my opinion, a lot of these gaps most likely in time get filled. So if this is the rotation upwards, these gaps are going to be easy price structure to move through. And you could easily pick it up as an interesting buying point around here. You do have what I would consider a failed buying signal right here, but then again, it could be showing that this is significantly discounted, and the RSI is showing that as well. So again, this area is definitely an area I'd be looking to buy, especially at that 200 SMA. Rotating on the way up, possibly filling this first gap, maybe not getting all the way to the second gap, but definitely a swing opportunity. Most likely going to get rejected off this $147 region for the first touch, but then depending on the price structure that you create, you could find support, rotate, and push up higher and try to claim basically new all-time highs. So this is a company that kind of trades independently, I would say, just based on its chart. It really hasn't had the classic downturn that happened from the October. As you can see here, it made its low in May, and whereas the market made its low in October. So this is a company, in my opinion, that just trades in its own little sphere. So definitely have to keep an eye on that. So with that, guys, I hope you enjoyed the video. Like, comment, and subscribe. It really helps the YouTube algorithm. If you have a ticker that you want us to go over on Friday, throw it down in the comment section below. We'll gladly review that for you. And think about possibly subscribing to the channel. We do a weekend deep dive, and as you just heard, we try to take viewer requested tickers just to give back to our viewers on every single Friday. And I hope you have a wonderful day, and thank you so much for watching.